Welcome to the Profit Answer Man, Byron Wolfe. It's great to have you join us today.
Thanks, Matt. I appreciate you having me on. Looking forward to some good conversation.
As am I. Can you share a little bit about yourself and your business?
Yeah, of course. So, again, Byron Wolfe. I am a CPA by license. Co-founded a full-service tax strategy and fractional CFO CPA firm called CFOAF. Co-founded that with my wife, who I've been working with since about 2008. So we have figured out the couples working together thing really well. I wouldn't advise it for everybody, but it works really well for us. So it's been really good. But we do fractional CFO services and high level tax strategy with the tax filings.
That's awesome. I love that. That's we don't do all the services you do, but we handle a part of it, and it's cool. And I just love that. What I found is I can meet a bunch of other people who do the same thing I do, and everyone's really cool about sharing and helping each other. And, it's like, I realize not everyone loves me. So they might like you, or they might not like you, and they might like me. So Find the person you like and that you'll listen to and go work with them if you need help. And I'm assuming if you're listening, you need help. So do something about it. Yeah. So we both agree on one thing. We don't really care what their revenue is because we're much more focused on actually how much profit they make and whether or not they've got good cash flow. I'd love to hear your thoughts on that.
No, I literally could not agree more. When we bring on people and we're, talking to them kind of on that, onboarding, like, let's see if we're a fit, step, they'll say, well, I'm looking to grow my revenue by this, or, my revenue last year was this, my revenue's, and I'll listen to it for a minute, but I'm pretty blunt, and I eventually get to the point where I'm like, look, I don't care about your revenue. I just don't. Like, I only care about your profit, because ultimately profit is what you get to actually keep. And I'm not interested in running $100 million business that I'm making $200,000 on. I would much rather run a $500,000 business that I'm taking $200,000 home with, because that's a lot less work. So I agree. Profit is where it's at. Revenue is a brag. Profit is the real, right? And so if you can focus on profit, get your profit up, that's more money you get to take home. You get to do the fun stuff. You get to support your family, like, you just live a better life. And who wants to work twice as hard and make the same money? That isn't.
And I agree with you. How far from reality do you think that is? $100 million company making a couple $100,000 a year.
I mean, I've seen some scary ones. I've seen some like 10, 15, $20 million companies that are, barely getting into the black. When you back out all the extras that, the owner has, like, they're probably driving a car that the company pays for. There's a lot of business meals, there's a lot of things that go into that. And so there's a little bit more than what it looks like. But ultimately, they're not taking home like life-changing money. They've essentially bought themselves a high stress, way too many hour job. If you're not making, significant money in your business compared to your revenue, what are you doing it for? Like, it blows my mind when I see these things, and they say, oh, well, I've always been told if I grow the revenue, the profit will come. And I think that's one of the worst sayings that exists. I can't stand it when people say that. It's second only to, we do it this way because we've always done it this way. Like, that's my number one hate to hear item. So, yeah.
What we tell people is profit is not an event, it's a habit. And if you can't be profitable up front, then that's a problem. And honestly, if you've got less than 10% profitability, chances are you're going to be in trouble, because the moment you hit a snag, that 10% disappears in a blink of an eye, and now you go negative. And so they really need to realize that, and be able to ensure that they grow it. Nothing happens overnight. I don't know what you found. Tell people, it's going to take 2 to 3 years to make changes. Because, like you said, if they've got a vehicle or they're stuck in a lease or other types of agreements, or they need to change their pricing, all of that stuff just takes time. To build out systems take time. But small changes over time add up to massive, massive differences. And honestly, the way I love to explain it is, let's just say you have $1 million business, which is the lower end for us. But if you can raise prices 10%, right? All of a sudden, you've taken your profit, assuming you had a 10% profit, from 100,000 to 200,000. You doubled your profit just by raising prices. And then let's say we cut costs. So in that business that they were making 100,000, you cut costs by 10%. That your 900,000 was your expenses. Now you go to 810,000. So you're still spending a lot. You now went from 100,000 to 290,000 in profit by just turning those two levers a little bit. And I don't think they're that hard to turn. Do you?
I really don't. It's all in like what you're looking at, right? Like, what gets measured gets managed, right? And nothing's truer than that. So if you're looking at those metrics, you're looking at what everybody calls KPIs, key performance indicators. When you're looking at those specific metrics and you're really focused on them, you're right. Like, it's not that difficult to find incremental changes. Like you said, raise your prices 10%. Your costs are the same. So that 10% goes directly to your bottom line, much better than exactly your example, $1 million business taking home 100,000, say, well, I want to make 200,000. So I'm going to double my revenue. Well, you double all of your costs as well. And in reality, you're probably doing twice the work.
You're doing more than twice the work.
Yeah.
Because it's a bigger system, more people, more management, exponential now.
Yeah. So if you can just do that little 10% move, let's raise our prices 10%, if you can make that incremental move, you're going to have a much better environment. Or like you said, like, hey, let's reduce our expenses. And maybe it's not one particular item, right? Say, hey, we're going to reduce our labor by 10%, right? Don't try that, right? Hey, we're going to reduce our labor by 2 or 3%. We're going to reduce our other fixed expenses, right? Like we're gonna move into a smaller building because we don't need this big building. We're gonna, maybe we get a more reasonable car, like you said. It takes a while, but hey, you don't need a Lamborghini when you're running a few $1 million business, right? Like that's not a good business expense. So bring your level down for the vehicle so that profit can go up, and then when you want to go buy the Lamborghini, but like buy it in cash because you've had a tremendous, year, 2, 3, 5, 10 years, and you've amassed that wealth that allows you to buy an asset that is going to produce that revenue, that additional dollars that allow you to buy the fun toys. That's the real game. It's incremental. You don't have to make these major swings. It's incremental changes to your expenses, incremental changes to your sales, or your sales price, what you charge your customer, what you charge your client. These little changes add up. If you're doing a few things at the 2-3% change, that'll very quickly add up to the 10% you were talking about.
And it will. It really doesn't take much. Now, you talked about KPIs. That's somewhat of a business financial term. You also said to look at certain points within the business. Do you find that a lot of business owners don't necessarily even know what to look for and what some of these terms are? And so you're a CPA. No offense. I make fun of them. My wife's a CPA, so I'm allowed to. And it's basically because I'm like, you guys are talking like wonk, 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 wonk. Like, the people don't listen.
No, they don't. And I tell people all the time, I'm like, hey, if you have trouble sleeping, let me invite you to a CPA conference. You can come, you sit in, you'll sleep like an absolute baby at the end of this thing. Probably a couple hours into it, you'll be knocked out. So trust me, I understand, very different. I tell people all the time, like, best compliment I ever get is when people meet me, they get to kind of know me a little bit, and they say, hey, man, I don't mean any offense, but you're not like a CPA kind of guy. Like, I don't really see you as a CPA. And I'm like, thank you, like from the bottom of my heart. As much as I love these guys, like that is not my personality at all. Hopefully, right? Hopefully, I'm not just wah 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 wah, in people's ear. But you're right. It blows my mind how many people do not know their financials. So, quick story: I'm at this high level event. Every single person in this room is paid at least $10,000 or more to essentially be in this room, and it's probably 100 guys, and they're talking about some stuff that's really like it's profit and loss items, things that you're going to find on your profit and loss statement, and they're talking about it. And the guy that was up there, he stops for a second and he kind of looks around and he says, quick show of hands, how many people in this room have 100% confidence in their profit and loss statement right now as it exists in your business? Keep in mind, multiple $1 million companies in this room, some of them, $100 million or plus businesses. 100 guys, roughly, call it 100 guys. There's about 8 hands that got raised in that room. About 8. So, well, there was more than that, but it was like all of us that are CPAs or people that are in the space. And the guy that was up there, he's like, "Yeah, no, I know you guys. Put your hands down." I'm talking about regular non-CPA people. There's about 8. So, like when you're talking, you're managing a company that's millions of dollars coming in, going out, and you don't have confidence in your financial statements. Yet, most of these guys have a bookkeeper, that's either like offsite, or they have a bookkeeper, possibly a controller. Like they have people in their organization that are doing these things, right? But they don't understand them. They're like, "Oh, well, I'll let so-and-so do it." How are you managing your business when you don't even know like the financial numbers that are coming in and going out? You don't have a clue how that works. How do you manage a business without knowing that? It's like hopping in a car, having no destination and no understanding of which pedal that you have to press to go forward or to stop. Where are you going to go? It blows my mind. So I agree with you. It's crazy how many people don't know these things. And we talk to tons of them that just don't have confidence in it. And we'll go a little dorky for a second. I promise we'll come back. I won't go full on CPA on you. But there's a difference between your profit and loss statement, your cash flow statement, and your balance sheet. All three give a very different look at your business, right? And you have to know what all three of those are. And then I'm really going to throw a kink in it. And there's cash basis and accrual basis on each one of those, right? So you need to know at least those terms and at least know what those things mean and what they indicate about your business. And if you don't, I got to be honest with you, I really feel like you are probably the problem. You are the holdup within your business from maximizing your profitability, because you can't manage what you don't understand.
And I get that. And I'll be honest, I don't know how you do it, but we look at the balance sheet every month and we look at the differences month to month and the change that occurred month to month. I find even most professionals don't lay out the balance sheet month to month to month and compare all the way across to see where the things are changing, because it's not how you're taught to look at a balance sheet. No. You're taught to look at it static in time, and that's wonderful. But the true essence is being able to see the changes. And I've come to realize that when most people look at a wall of numbers, their eyes go blank. Yeah. Me, I play Where's Waldo. I go, "Oh, there it is, right? I see it. Yeah. Why'd that happen? Now let's go backwards through the system." Like, I just have this ability to follow the numbers, to figure out where and how things changed and why. Then I have to have a conversation with the business owner. How did this come to be? And are you aware? I would say more than 80% of the time, like, I didn't know that. I'm like, and it depends, because a lot of time your employees are doing stuff. And at the end of the day, your employees, they probably aren't money savvy, and they are not paid to make you profitable unless you build that kind of system in there. So that creates an issue. So I totally get it, which kind of leads to the next part of it. If you're going to look at a P&L, how do you know, is that thumbs up or thumbs down? Because your P&L might say you were profitable, but that doesn't mean it's thumbs up, right? Because you might not be doing as well as you did last year, or you might not be doing as well as you thought you were going to do. I know for our clients, we always set projections, usually sometime towards the end of the year. I don't want it to be, if I start January 1 and we don't have projections, shame on me. Like, we need to have them usually 60 days in advance. And then every month we are always measuring against projections and updating projections. So we run very dynamic systems to say, this is what we said we were going to do. This is what we're doing. This is how it's going. Thumbs up, thumbs down. What do we need to change? What's the trend? How do we go about fixing it? And the other half of that still goes back to the balance sheet, because I can tell you something. The reason all these companies are so good at hitting the earnings targets on Wall Street is because all they have to do is play with their balance sheet, right? Yeah. There are so many games that we can play to say anything you want. I can make 1 + 1 = 3. Mm-hmm. What do you want it to say? And we'll make it say it, which I get that. But at the end of the day, for the small business owner, what really matters is, do you have cash? Is it in the bank? And can you take it home? Because otherwise, the rest of this is all BS.
100%. 100%. And so we had a client very recently. We're talking to him, and he was really down because they had a negative month, right? So they had a net loss for the month, and they've always had at least kind of a break even or profitable. They're on a growth cycle, which is fantastic. They had a down month. Oh man, like it's horrible, and I don't know what I'm going to do, and blah blah. And I had already looked at the financials, so I knew what the real story was, right? So and so he's talking, and I'm like, yeah, it stinks to taking that loss, but have you looked at your bank account recently? Like, have you looked at what you've got like in your bank account? And he's like, well, yeah. And I'm like, well, how does that look? And he's like, well, that's actually really good. Like, bank account balance is really good. I'm like, okay, like, well, that the cash flow insights that you get, like, that we go over every month, or actually like every 2 weeks, like, how'd that look? And he's like, well, I don't really look at that much. And I'm like, okay, well, let's look at that. And so he had taken a loss, yes, which is horrible, but he had a $600,000 positive cash flow month. And I said, the reason your cash looks so good is because you had a positive cash flow month. And you're looking at the P&L and you're saying, oh, we got all this stuff and all this stuff happened, blah, blah, blah. Like, you have to look at the whole picture. If you focus on one area, you're not really making good decisions. You're making it on one tiny little item, And then in the reverse, if you're just looking at the P&L and the P&L says you're profitable, you're thinking, oh, this is amazing. Everybody gets bonuses. Let's go buy the Lamborghini. Let's go do whatever. But if your cash flow is negative, you can make a decision based on a profitable P&L that will cripple your business. If you don't have cash flow, it doesn't matter what the rest of it says. It doesn't matter. Just because you're making a profit, doesn't mean that you get to meet payroll. I promise you, your employees are not going to take a piece of paper that says we made money in lieu of cash because you don't have cash. It just doesn't happen. You got to have it. You got to have it.
And I think that's what people don't realize is growth takes cash, and you have to grow in line with your cash availability. Because if you outgrow your cash and there is no cash, unless you're Uber, which took 15 years to be profitable, you're in trouble. We don't have that ability that Uber does to go forever like that.
No, we don't. And most businesses, they don't think about this until it's too late. And so we always try to like keep a really good eye on the cash flow, and we anticipate things that are going to happen. When we had a client came to me, hey, we're going to land this $100 million contract. We're super stoked. 5-year, $100 million contract, $20 million. This is going to be amazing, blah, blah. And I celebrate with them. Yeah, man, this is fantastic. I love to hear that. How are we going to pay for it? Well, what do you mean? How are we going to pay? When does the money come, right? What's our outlay before we start collecting cash? What does that look like? What does the contract state? And so we go over the contract. We're looking at it. I'm not an attorney, but like I know how to read these things. I'm looking at it and I'm like, you've got 120-day deliverables on here. Can you finance $100 million project for 120 days minimum?
It's not 120 days. I'll tell you why. Because they had to actually build and create the product before they build for it and put it on. So it might be 240 days.
Yeah.
Or at least 180, depending.
Yeah. And it's just constantly recurring. So yeah, maybe you get some more money in, but maybe you've ramped up. And so you finally get some money coming in at 120 days after billing it. But now maybe you've ramped that up. Now you're producing at double that. So the money that's coming in needs to be able to cover everything that happened and everything moving forward. And it was mind blowing to this client to think about that. They're like, well, I can't afford this. And I'm like, but you can, but we need to take everything into consideration. Like this is going to be either a line of credit. It's going to be, equipment loans on equipment. It's going to be, something. You're borrowing money from yourself. If you have the cash flow to cover it, you're borrowing money from yourself, or you got to borrow it from somebody. That's investors, that's, private equity, that's banks, whatever it looks like. You're borrowing it somewhere, whether it's yourself or from somebody else. You're borrowing it to make it work. So we've got to look at the cost of that against this contract. Even though the contract looks crazy profitable, you need to know your real costs that are involved. And this is going back to what you said. Balance sheet can make anything look a specific way. That's the reality, right? But when you're looking at stuff like this and you're like, oh, hey, we got this contract. This contract's worth $100 million over 5 years, right? No, it's worth the paper that it was written on at best, because it's a liability. It is future, but it's in reality, it's a liability. You've got to hire the people. You've got to build the infrastructure. You've got to build the systems. You've got a liability at this point. Eventually, yes, it will pay off, but that's going to live on the balance sheet now. Hopefully, eventually it gets to the profit and loss statement. But in reality, as soon as it starts moving, it lives on the cash flow statement. And it's a big negative on your cash flow statement for a while. So you've got to be able to either afford it to borrow the money from yourself, or we've got to go find that money before you start. So just having the contract doesn't mean anything. It's the ability to fulfill the contract and what it's going to truly cost you to do that. If the contract has a 20% profit margin, but you got to go borrow hard money at 20% to make this job happen, that's a bad deal. That's not a good contract. So, we have to look at everything. And that's why I think it's so important that we do, and again, we both kind of do the same thing. It's so important to have that person in your corner that can celebrate with you, but can help you to see the true dynamics, the true dollars, the true financial cost or benefit of decisions within the business, and the true financial position of the business. Because if you don't have that, then there's a whole lot of things that might look like a rose, sure don't smell like it.
This is why, for my clients, I want to be involved before the proposal is even made.
Yes.
Because I want to put dollars to the borrowing cost. I want to, instead of 120-day terms, I want to start negotiating for 60-day terms or prepayment or whatever I can do, so that when we make the proposal, we know, hey, okay, it's going to take us 120. I've worked out with the supplier that we can pay him in 120, but it's going to cost me 5% more. So we've adjusted whatever. I mean, I'm just making up numbers, but the point is, you've adjusted everything, and the price that you're offering is reflective of the fact that you decided to become a bank and loan people money for 4 months. And 4 months never is 4 months. It's always 5 months because that's just life.
Yeah.
And who the hell needs that kind of stress at night? That's all I want to know.
I like to sleep, so I don't want it.
And we are both the same, which kind of leads me to my next point, which is let's work less, let's work smarter, let's systematize. I don't believe in grinding it out, and I don't think you need to work hard in order to be successful in business. I'd love to hear your thoughts.
No, yeah, no, I agree. I think it's let's work smarter, not harder. If we make smart decisions on the front end, and this is really where like proactive approach versus a reactive approach comes into play. But if you're making smart, well thought out, ahead of time decisions, working smarter, you don't have to work incredibly hard. You don't have to have that massive burden on your back. If and you can talk to any firefighter out there, and I love using firefighters for this example because that's exactly what you do in your business. If you're not proactive, you're a firefighter, you're putting out fires. You talk to any firefighter and you say, hey, if I tell you that a building is going to catch on fire next week at a specific time, and I can give you the specific reasons that building's going to catch on fire, what do you think your chances are of fighting that blaze? And they'll tell you it's not going to happen, right? I know where it's at. I know when it's going to happen, right? Like, it's not going to be a fire because I can deal with it now. Well, like, why wouldn't you set up in your business a way to anticipate anything that's coming down the pipeline? You know what's going to happen. Let's build the systems. It's a reason like commercial buildings have sprinkler systems because if something catches on fire, the sprinkler system kicks on, right? We don't wait for the firemen to show up with a fire truck, connect to the hydrant and then spray some water in there. We want an immediate reaction. And you're still going to have issues that happen in your business. But when you've freed up all of that bandwidth by working smarter, not harder, when you do have those small hiccups, the things that you can anticipate, you have the bandwidth, you have the ability to deal with it free time, and you probably already have a strategy or a system or a process in place to plug that problem immediately into and find a solution very quickly. So, I'm all about systems, processes. I think it's everything. If it can be systemized, let's systemize it. Let's set up a process for everything, build it out. I don't care if it's the most basic thing in the world. If you do it and everybody does the same thing and they have a well thought out step-by-step plan, it's really hard not to find success when you're just following the process. So, I agree with you. I don't think you have to work your tail off. I think if you're working that hard in your business to try to find it, realistically, you have a job. You don't own a business, you own a job. And we're business owners. We want to own businesses. We do this. We do the crazy stuff because we want to enjoy life. Like that's the reality.
I'm okay if they have a job, but it should pay really, 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 really well. And you should work about as much as your employees do, right? In other words, you shouldn't be the one killing yourself. You know how your employees work. You get the concept, right? If that's your thing, that's fine. But there's no reason that you can't make a lot of money doing that as well. You just have to figure it out for you and see how it all kind of comes together.
Yeah.
Anything we should have talked about but didn't get a chance to?
Oh man, we covered a lot. I mean, I think that a lot of people that start out in business, they find something that they enjoy and they just jump full force into it. I'm just going to do this, right? And so they become realistically technicians, instead of business owners. So I think, and I'm not telling people not to chase their dreams, but definitely take a minute to really like think out the process and like, what does this look like? What's my ideal target? What's my target audience? My ITA? Like, what am I going to sell? Who am I going to sell it to? Right? What does this sales channel look like? What does the marketing look like? Look at all of these different pieces of the business because there's multiple pieces. And if you can do all of those for a very short period of time, but if you're everything within the business and nothing gets delegated and you don't let anybody else come in and take stuff off your plate, you're going to burn out. That's just the reality. No matter how much you love it, something you love can become something you hate because you don't take the time to build in the systems and the processes and ask for the help that you know you need, but you don't ask for it because you're, prideful or whatever, so like if you're not good at numbers, find somebody that's really good at numbers, and hire them or partner with them or whatever. If you're really bad at marketing, find the person that's really good at marketing, and hire them or partner with them. Realistically, we can wear probably two, maybe three hats in our business at most. We can't wear all of them. So if you want to be the CEO, realistically, you should be picking one, maybe two other areas that you're going to be involved in, but you can't do all of them. It's just not reasonable. Once you get to a certain level, you can't continue to wear all the hats. And I'd love to hear your opinion on that, coming from the finance side, like I am, the accounting side, like how often do you see that with your clients that they're just doing everything?
They are. I think the marketing one is really a struggle in the sense that what I have found is more often than not, it's very hard to transfer to someone else what you truly do for clients. And until you can define it for yourself and you understand, it's hard to turn that over. Numbers are easy to turn over, right? Because we can see them. Systems and processes depends. Like some people are systems and process people, some are not. Yeah. But a good systems and process person can come in, look around, and extract what they need. So I think that part takes a lot of time, and it's slow and it's tedious, and nobody wants to do it.
Yeah.
But the biggest returns are there. And a lot of times, I think there's so many roadblocks in the way that people don't even realize what can be systematized. Other parts of the business, like doing payroll or HR, like that stuff can be outsourced quickly.
Yeah.
So it's just, it really kind of depends. And everyone's, again, got their own skill sets. So it's what do you like doing? Go do that. What don't you like doing? Get help. And the easiest way to do it is build excess cash flow and profit so that you can pay people to do what you don't want to do. And then you have more time to do the highest value, which means you can grow your revenue that way because you have the time. So that's kind of the way I look at it.
No, I agree with that 100%. And you're right. I mean, numbers don't lie. So unless this is just the area that you absolutely love, that's the best and easiest place to selfish plug, for both of us. But I mean, it's the easiest place to bring that person in. And you're right. Like that person is going to free up profit, free up money that allows you to start outsourcing some of those other items or hiring or partnering, whatever it looks like for you. That's going to give you the freedom to do that. And it's allow you to really focus in, like you said, what are the things you love to do, right? And there's definitely going to be something in a business, or you wouldn't have started it, that you absolutely love to do. And I don't care how much you love it, there's also things that you don't love to do, right? And so, that bringing in the person that knows the numbers can really give you the metrics and say, hey, if we do this, then this is the result. And like, if you'll hit these KPIs, you hit these metrics, then this is going to be the result. If we hit our forecasted numbers that we forecasted together, we've built this up. If we do these things, this is where you will end up. And that gives you an immense amount of freedom to fill in the gaps of the things you don't love so that you do have the time to do the things that you do love. So I love the way you put it. I couldn't agree more. That's exactly what it's about.
I'm glad we're in so much agreement. Now we just got to get everyone else to agree with us. We'll work on that.
Yeah.
If people would like to learn more about you and your services, where is the best way for them to find you?
Best place is just hit our website. It's CFOAF. Very easy to find, CFOAF.com, like Chief Financial Officer. you know what the letters stand for.com, right? Accounting and finance. So CFOAF.com, or any of the social medias. We're on pretty much all of them. You can hit us up there. I don't do TikTok dances or anything like that, but I do throw out some interesting information, and you can find us there. You can hit up my wife. We do couples leveling up, which is specifically designed for couples that are in business together that are looking to scale their business while at the same time protecting their relationship and growing that relationship as well. So either one of those, you can hit us up on those, and happy to reach out to anybody. Like I said, we're pretty much a full service, but like you said at the beginning of this, in this industry, there's a tremendous amount of crazy intelligent people. So if I'm not the one, if Rocky's not the one, find the person that works with you that matches your style, matches your where you want to go, and partner up with them. And don't be scared to reach out to multiple. Like I'm not going to speak for, well, I guess I will speak for Rocky. We're very good at what we do. And so, if you talk to multiple people about what we do and the direction that you want to go, I'm never offended by that. I think you should have multiple people land on it, because I'm very confident in what we do. I know Rocky's very confident in what he does, and you're going to gel with somebody that's going to help you take that business, take your lifestyle to the next level. But just the only thing I will say is don't not reach out, right? Like, there's nothing wrong with asking for help. There's nothing wrong with getting some additional assistance and growing that. There is zero businesses out there that are successful that didn't ask for help at some point, right? None of us do it all alone, So, that would be the one thing I would want to leave the audience with is, like, reach out, find the people that help you grow to be where you want to be and at the place that you want to be in your life.
And it's true. I think the world of owning and running a business can be lonely, and having help is definitely awesome. Thank you so much for joining us today.
Yeah, thanks, Rocky. I really appreciate it, man. Great discussion.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.